The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 9th, fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to present us with. And, you know, folks, when we can do that, it means we can find a gift in every set of circumstance. So let's make sure that we do that. Pass that along to folks. I want you to know that I'm absolutely grateful for your presence here. And more importantly, though, I'm here to serve you. So feel free to pick up this phone, that phone, any phone you want, the bat phone. Dial on in 877-927-6648. Of course, internationally, 727-445-1044. Let's go ahead and get this show started on fabulous and fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow trading up 67 points at 19,682. S&P up 7 at 2253. NASDAQ Composite up 15 at 5432. Russell 2000 down about a point and a half. She's trading at 1385. Gold's back about $10, 1162. Silver's off 14 cents. Light sweet crude up 58 cents. Bonds are back. The Japanese yen is on a roll. That's headed higher. Don't expect gold to trade, make some type of turnaround Friday, nor bonds to do that. The only way that's going to happen is if the yen decides to strengthen instead of weaken. And we'll take a look at that. We'll take a look at anything that you want. Of course, you can send me an email, steve@tfnn.com. My preference is to hear from me at 877-927-6648. Of course, inside the Tiger's Den, instant messaging will do. So, had a couple of questions that had come in, and we'll get to those. But first, the question is, hey, are these markets ever going to form some type of a short-term top out here? And the answer to that question, well, yeah, eventually, but that time may be more upon us than one might think. And I'll show you what I mean by that. If we take a look, we'll look at some short-term charts out here. Now, these short-term charts have pretty much been steamrolled as they've been giving us some signals. So this is called caveat emptor, buyer beware. But if we do take a look at the NQ, we rolled over to the March 2017 contract. You can still buy and sell the December contract through next Tuesday or Wednesday, I believe, the 15th, right, whenever that is. But for the most part, you should have rolled over for your trading into the March 2017 contract. Now, what you're going to see here is one of your favorite patterns. This is coming off of that big blast to the upside that began a couple of days ago at about 10 o'clock in the morning, 10:30 to be exact. This was on the trading session of December 7th. Big move to the upside. Since that big move to the upside, the NQ has finally gotten to that seventh wave move. Now, it did this here at 11 o'clock this morning. Happened to form a bearish reversal signal at the same time, little shooting star. So we know that seventh wave is a significant level of resistance. If it gets taken out, these markets are going to continue to scream to the upside. We could take a look at where they're eventually headed to as well. But right now, as we speak at 1:10 in the afternoon, you have a pattern that we look for that gives us at least a short-term reversal signal. Now, price as we speak right now is trading under Stevie's oscillator and change line. That is the red line on my chart. That means as we take a look at it, the price oscillator, which is not shown here, has turned down. Says retracement would be underway. Now, with regard to where the retracement would take us to, should in fact unfold, would be 48.79. We're at 48.85. to the 4873 number. Now, 4873 is what you want to pay attention to because it happens to be the 30-minute TAS market profile. And in this box, which is the range is 4873 to 4894, it's really in possession of the buyers. Of course, you and I know that because we take a look at that center of the box. It's really not the center of the box. It's the middle line of the box. In this case here, closer to the bottom of that box, which says, communicates to you and I that it's really buyers that are in control of this area here. So we do have a signal inside of the NQ. Interestingly enough, if we look at and we step up to the next time frame that I like to use, the 2-hour chart, same time frame that you like to use, well, we can see that same 7th wave session. Now, this is not one from December 7th. This is one coming from one of those price relative strength divergent patterns, one of your other favorite patterns out here that formed at about 8 o'clock in the evening back on December the 4th. So now we have 2 wave Gs, 2 7th wave moves that have formed. Now, the one that we currently have, the high was made as we came into the noon time frame. That means this bar is not over. It's not closed until 2 p.m. So we've got another 49 minutes or so to confirm that the candle session that took place at 12 noon was, in fact, a 7th wave move. Now, price so far has simply come down to test that oscillator and change line. Different number than you'd see on a 30-minute chart because it's different math out here. So price has come down, and it is simply tested support. That means at this stage here, those market profiles that we looked at on the 30-minute basis, they really may not apply just yet. You'd need to see it close below 48.82, the current oscillator and change line, before those profiles or that bottom of that 30-minute box would really come into play. But nonetheless, you've got 2 time frames inside the NQ out here, which some would say is struggling. Now, it depends on what we're comparing it to out here. And it has given us some type of a potential short-term topping signal. Now, that is, and the NQ is not alone. So that's the beauty as we take a look at these patterns out here, because in the case of the ES Mini, no 7th wave move out here, but you've got wave number 6. But price was moving higher, doing less relative energy. A little bearish engulfing that took place here at 11:30. Price still trading above that oscillator and change line. That TAS market profile not really providing a ton of help out here. So the ES could spike up, make that 7th wave without the NQ doing it. That's one possibility. Or, in fact, the little short-term top could be in play out here. So you've got that type of a topping pattern. If we go take a look at the Dow, which is really the one that, in essence, we'll say is on fire, well, that fire may be put out. It may be, is it Smokey the Bear that puts out fires out there? Is Smokey the Bear, like, even though I'm feeling like just basically crapola, for those of you that like to, use the Italian, not the Latin version of how you feel like crap, is we've got inside the Smokey the Bear may be present, just to say a little sense of humor there, may be present inside of the Dow. So as we take, and why do we say that? Well, price was moving higher, doing less relative energy. Okay, we know that. We see that. No bearish reversal signal. None yet. 7th wave move, possibly, as long as the high from the last half hour doesn't get taken out. So you've got one of 2 things out here. So the number to be watching is, hey, first, is price going to get below that oscillator and change line, 19,619? So we have some potential unifying messages. Now, that's the beauty of that. If we get a nice confirmation here on a 7th wave move inside the Dow, between the Dow, let's not stop there. That would be foolish to stop there, because inside the Russell 2000, that's also given us some. In fact, the Russell 2000 has said, okay, sayonara, adios, I'm ready to go ahead and make a retracement. Price moves higher, less relative energy. We're now down below its TAS market profile on a 30-minute basis. We haven't been below that since December the 8th out here. What's today? What is today? December 9th? Yeah, so for a day. Steve Rhodes with TFNN. We'll finish up with this, and we'll go take a look at some of those questions that came in. We'll be right back, folks.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So what we've established here is the short-term charts, 30-minute, 120-minute charts. They have reversal-type patterns. Now, it's not like this is going to be the all-time high, but while everybody out there believes that the market can't trade lower, you and I know differently. We just simply pay attention to the patterns. It's going to be a different picture when we look at the daily charts and the weekly charts out here. But what we have up on our screen right now happens to be the 30, 60, 90, and 120-minute time frame charts for the Russell 2000 futures contract. Now, in this case here, there's a 10-minute delay, so it's not going to be exact, but it's close enough for our game. It's close enough to show you what the markets are doing on these time frames. In the case of the 30-minute, I had mentioned that price was trading below its 30-minute box order. That's the green line, price at $13.85. Now, price got below that about an hour, 11 o'clock, so a couple hours ago. Got below that, tested and rejected it, meaning it stayed below that at 11:30. The same thing at noon, the same thing at 12:30 to 1, and now looks like the same thing from 1 to 1:30. So that gives us at least a short-term change in trend. Now, there's a brand new market profile that formed out here on the 60-minute chart, and you can see, well, I'll go ahead and blow it up. Blow it up. It's not going to show that much more, so I won't even do that. But a brand new profile did form on the 120-minute time frame. Bullish, by the way, profile. Bullish biased profile is really what I should say at about 12 noon. Center of the box, really the middle line of that box, closer to the bottom. Price is trading below that. Suggestion: change in trend coming inside of the Russell 2000. Same thing happened on a 90-minute base. You may say, hey, not much difference between 30, 60, and 90. Well, actually, there is enough of a difference for us to go ahead and pay attention to it. And on the 2-hour chart here, we can see that price is back inside that box. So where is price likely headed to? I would have to say, when we take a look at this chart here, I'd be gauging the 1373 level. Now, if we go take a look at the daily chart here, for the Russell, what we're going to see is price even on a daily basis has been stretching higher, doing less relative energy. Only wave C to the upside out there, but that doesn't mean that price can't pull back. So the price range for any kind of a pullback larger in scope here would be between 1360. We know this number is going to change. That red line is going to continue to rise as price pulls back. So if we look at that 1373, 1376 here, that's probably a pretty decent area for price to go ahead and pull back. Of course, if in fact that's the way that this thing plays out here, and the questions will be, okay, the market's made these all-time highs and that was it. Adios, the Trump bump. And come on, give me a break out here. I know you don't, but you ought to really spread the word here. Over the course of the last 84 years, the market makes a bottom when? In October. In fact, October 13th, to be exact, is when that bottom comes in the market. Hillary Clinton, Donald Trump, I don't care who it is that was running for office or won for office, when does the market make a bottom? Has nothing to do with Trumpola out here. Come on, folks. That's really when the Santa Claus rally begins. Maybe it's moving higher, at a faster velocity because of election results. Maybe it is or it isn't. But come on. We know that the market, it doesn't matter whether it's Ebola or whether it's Zika or whether it's the Russians shooting down a plane. The market forms these bottoms, not always, but we do it over the course of the last 84 years. What the market does and what the Dow does is forms a bottom in that October timeframe, middle to end of October. Market has, in fact, just done that. Market moves higher through when? Typically January 6th. So you should still be taking a look at trying to buy the next dip out there. You can play short term to the downside, but to jump on it and go all short out, hog heaven, I don't see it in the patterns out here. Short term, you see what I see because we went ahead and we shared that with you. Now, one of the questions was, hey, Steve-O, that's great that you do this analysis for us. I'm kind of paraphrasing here, but I don't use the equity futures contracts. Can you please show me where the SPY is going to? Give me some type of input there. So the answer to that question is absolutely. So let's go take a look at the SPY out here, and we're going to take a look at 3 different panels because it's important. And when you write in, and I love getting your emails, and if I don't respond to an email, it's gotten to a junk box. So please make sure in the heading, right up front, big capital letters, something like TFNN. If you're a subscriber, capitalized subscriber, put it up there so that it doesn't get trashed with the 1,000 or so. And I'm not kidding you. Pieces of mail that come in, most of which are junk out here. But it's important to stay within your time frame. So the time frames we're looking at, monthly is in the left panel, weekly is in the center panel, to the right is daily. You're going to have different messages with regard, and you should trade it a little bit differently, and you should stay within your time frame. Always know what's up above you and below you. But let's go ahead and take a look. Let's start with the monthly time frame out here. Let me go ahead and I'll blow this up on my screen out here. This is data that takes us back into 1997. Now, one of the first things that we're going to take a look at is the move off of the bottom in 2009 to really the first, what I'm going to call the first level that it made up. That's that little yellow rectangular-ish looking box out there. So that's the first thing I'm going to go ahead and note on this chart. The second thing is I'm going to go ahead and take the same distance from low to high, that March bottom to the high that took place in October 11th. I'm going to take that and attach that, in essence, to the bottom in February of this year, in order to be able to give us a price projection of where is, because the question was, what is the SPY doing? Well, what the SPY is doing is it's on its way into the 251 type area. Why? That's a good question. Why? Well, the reason is if we just simply take a look at basic Elliott wave techniques, what we're really doing is we're looking for 5 different waves out here, totally different than that 7th wave move out here. Here's wave 1, which fits the rules perfectly with regard to wave 1, the little green arrows, where we've measured that rectangular looking box out here. So there's wave 1. Then we take a look at where's wave 3 out here. Wave 2 happened to be wide, and so that's a good question. Wave 2 is, well, where is it? There we go. There's wave 2. Where's that line? Where is that line? There, that wasn't it. Where is it? Right above it? Nah. I know it'll show up on my screen in a minute. But here's wave 3 where we've got the green line, largest wave that's out there, makes a retracement. Then wave 4, I'll decorate this chart here for you. And so it becomes very easy to come up with a price projection, which in essence is equal to this first wave. That's why the longer term 251.83 is where the S&P 500 at a minimum is targeting. So we're in wave number 5. We're well above previous highs out here, meaning the May 2005 highs out here. So this pattern is fully in play. Here's your 1, 2, 3, 4, 5 waves on a monthly basis. What we can also do is we can add, let's do this. Let's take a look at the long term. Here is the long-term consolidation pattern. Again, this chart taking us back to data from 1997. It's about as clear as can be. We know that when a consolidation pattern is broken, price moves equal to or greater than a consolidation. So look where this takes us up to. So here's our range of where the S&P 500, just utilizing 2 different standard normal techniques are. Somewhere between about 240, says 239.84, and 251. That's where it's headed to. Hey, the last piece of information that we'll add to this monthly chart out here, this happens to be our horizontal trading range boundary lines. And that says the next move up is 239.59 out there. I'm pretty much sure that measured, that equaled where we looked at that long-term consolidation pattern. Short term, you might be seeing a pullback here. Longer term, this is where price is headed to. Steve Rhodes with TFNN. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Just to finish up just to go ahead and finish up the SPY out here. Yesterday, we spent a little bit of time on the SPY. Here's the weekly chart. And what we know is that on a weekly basis, we have a confirmed A to B equals CD to the upside. So that gives you a price projection here of 230.08. The green lines on this chart, we're looking at a weekly chart. They happen to represent the horizontal trading ranges. They're going to be different than a monthly, which are going to be different than a daily, because we're always looking at the close of the body, right? The body, the candle being the essence of price out here. And so what we've got is the 228 to 230 level becomes the one-to-one price projection inside of the SPY. And if we take a look at the daily time frame out here, on the daily time frame, what this tells us is that if price clears 228 to 230 to then 239, 232 would be the next stopping point. That's the midpoint of its daily horizontal trading range boundary line out there. So I hope that that assists you in really taking a look at what's going on inside the SPY. With regard to intraday and other types of reversals out here, the better data really comes from the equity futures contracts. You don't have to trade them, but you have all of the action, 23 hours in essence worth of action, price discovery data to go ahead and give us price moving higher or lower with less relative energy. Wave counts out here, 7 waves, for example. Price moving higher or lower with less relative energy. A to B equals CD patterns. So you really want to, if you're going to trade the SPYs, you really want to get access to the ES Mini. Okay. Let's take a look at another question that came in inside the Tiger's Den. One of our denners looking to or maybe long the 10-year Treasury note here. We're looking at the March 2017 Treasury note. That's on the bottom portion of my screen. Now, I switched to a line chart out here, really just to illustrate what I'm at least looking at. And at the line chart, the black level, the black lines are nothing more than the closing price on the top panel of the Japanese yen futures and the bottom panel of the 10-year note. Well, we can see on the top panel here, and this is my take, is that it is the yen that is ruling the world, or at least ruling the world with regard to treasury notes, treasury bonds, gold out here. And what we have seen here is we saw just a smidgen of hope, where we saw price get above that oscillator unchanged line, meaning that the price oscillator had turned up. Price oscillator, by the way, is well below zero, and it has turned back down. There is just nothing more bearish than that. And right now, the 10-year Treasury note is starting to trade below its oscillator unchanged line. This does not look good. This is not necessarily going to call the bottom tick. So that's not what this is going to do. This is going to be a trend-based tool that's going to put the odds in our favor when the trend has changed. It has not changed when we take a look at these daily charts for the Japanese yen. Another question came in and said, okay, well, where is the yen headed to? And where the yen is headed to, Lord knows out here. But let's go take a look at it. We're going to look at it in opposite now. And as we take a look at instead of looking at the yen future, we're going to look at the Japanese yen US dollar correlation. And we're going to get rid of the profiles. They're not helping us at all because price is well above. We know that the most recent high has been taken out, right? Most previous swing point. So that says, okay, you go up to the next swing point. Here's a daily chart. Quite frankly, where my eyes would go immediately is if we're just going to take a look at just your basic swing point analysis, that says 121.68 out here, right? Just by once you clear a swing point on the intersection, just like no different than driving down a road, right? You get to a major intersection and you're going to drive most likely to the next major intersection unless you have to duck into a subdivision or something along those lines. But that's in essence what we look at with regard to the market. So it's right now up and above an area that should have been resistance. Here's all those other intersections out here. You can see them in the February timeframe in 2016, the early March, mid-March timeframe, and price has now gotten above that plus the recent high out here. Does it mean that price has to continue moving higher? And the answer is no. Let's put this on a weekly chart. Well, we know that becomes one target. And if we take a look at the move here from high to low, that high to low, let's go ahead and take a look at retracements. And a retracement I'm referring to on a weekly basis starts in June of 2015 all the way down to the June of 2016 level. And price right now is sitting right at the 0.618 retracement level. So the answer to the question, if ever there was a point, and I'm not referring to the point and the price at 1:34 p.m. right now like it is, but anywhere nearby this time frame, today, Sunday evening, Monday morning, if price is going to turn, it's going to do it just about now. 115.49 is the actual 0.618 retracement. We've seen a high of 115.36. Boy, that's pretty good work on the Fibonacci, Leonardo da Fibonacci out here. But if price cruises through that, this then also communicates to us that it wants to go to the next level. And the next level with regard to Fibonacci numbers become the 119.97 level. Now, there is no reversal signal that I have seen, I don't believe. Let me just switch back over here. I keep my eye on it, that's for sure. If I take a look at the 30-minute, so we've come down to a much shorter, and this back to the yen futures out here. Is there anything that I see that shows any signs of some type of reversal pattern? And the answer is, unfortunately, no, there's not. So that's what the Japanese yen is doing out here. Now, if we go back and just quickly take a look at bonds, take a look at the 10-year, let's get it off of a weekly chart out here. That's not going to help you a whole lot. You know, what's the saving grace that you have here with regard to a long trade that you might be in? Is the mere fact that you have not, or it has not taken out its December 1st swing point. So down at about 123. And 19-30 seconds out there, so 0.19. So that's a little bit of a saving grace. With regard to Goldilocks, if we take a look at it, really the same kind of thing, I suppose. It hasn't taken out the December 5th low at 11.58. The low so far today, 11.59 out there. But this is not going to turn. It is not likely to turn until we see that yen correlation, until we see the yen strengthen. Unless that becomes unglued out here. And at this stage of the game, we know that it hasn't become unglued. At least I believe it has not come unglued the way that I look at things. I could always go find my 10-minute charts, and then we could see it sort of on a 10-minute bar, directionally speaking, to working bar to bar, meaning a higher high, a closing, a bar that closes above its open or below its open, will be in lockstep and sync with regard to what's going on in either gold or in the Treasury bond. So I hope that helps you as well. I didn't write down who wrote that, and looks like Kaz wrote that down. So now I don't know if there's any other questions inside of the title. There's a question about, have I ever noticed how have ever noticed if an index repels the oscillator and change line like a support level? And that's really what that oscillator and change line is really used for, is a support level. If we look at I'll take a look at the ES mini. Once price gets above it, it helps you to eliminate one side of the trade. That's assuming that you don't see some type of intraday pattern like you and I were looking at when we began the show, looking at 30-minute charts out here. But typically, when price starts move back towards it, it should find support. Now, it really didn't do that for 2 days out here inside of the ES mini. Now, this is the March contract, so it's going to be a little different than if we were to go put up the December contract. But once price closed back above it December 5th, the price oscillator was rising. I don't know if I've got that here. Yeah, no, I don't. That's the look, I'll just say it like this. It's a pretty simple rule. Nothing more bullish than a rising price oscillator above zero. Nothing more bearish than a failing price oscillator below zero. In gold and in bonds, the price oscillator is definitely below zero. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Whoa, that was interesting. Welcome back, folks. Okay, so let's take a look at the Australian dollar. John from Sarasota writes in, and the question is close to a... No, that's not. I thought it was the Australian dollar. I saw AU. It's AUY. So let's go ahead and actually answer the question that he was looking at, which was Yamana Gold. AUY is the ticker symbol. So let's go take a look at it. And, you know, if you want to know what's going on with the Australian dollar, just go ahead and send that back to me as well. But as we take a look at Yamana Gold, let's look at a couple of different tools out here. First, we'll start with this chart, which shows us our TAS market profiles. I got different colors out here. Let me go switch over to this template right here. So this will go ahead and populate it, I believe. Or if not, I'll go ahead and make sure it's populated with my here we go. We'll populate it. So here's the first piece of bad news with regard to Yamana Gold, AUY, is that it's below all TAS market profiles. So no levels of support out there. All right, so we're going to go ahead and turn those off. We're going to look at daily and weekly out here to help answer John's question. Is it perhaps near a bottom? Now, we're going to take a look at the swing point out here that I am using as our benchmark is going to be November 4th. Daily chart that we're looking at. Low is 291. Volume is 172. In fact, let's go ahead and put a yellow line across the bottom of that. And we can see that this level was tested twice recently, once on November 23rd, 16 million shares going against 17 million shares. Now, the problem with November 23rd is that was the day before Thanksgiving. So volume was going to be light on that day, just as the following day on November 25th, which tested was 6.4 million shares. So I don't know if that's a good gauge. What might be a better gauge, though, is a trading session from December the 1st, which had nearly 13 million shares. So this has been tested with light volume out here. We did see what I'll call a junior sign of strength out there. Now, the reason why I say junior is because you did see some nice volume to the upside on December 5th, 17.8 million shares. But we didn't have wide price spread. In fact, we had basically no price spread out there. So what does that mean? Jelly bean. I don't know if it's a bottom. inside the Yamato Gold. Let's go take a look at the weekly chart. Maybe the weekly chart might give us a little bit better information. Plus, we're going to be able to see further left on the chart out here, right? And try to figure what's going on. But that swing point that we use, we'd actually have to use really a different swing point out here on a weekly basis. It'd be the week that began November 21st, which had 51 million shares. Last week was 59. Now what you want to see. And this year at 50 million shares. So a little bit lighter volume, but you haven't really tested the low, which means 288. So the weekly chart, John, would say, yeah, you really want to see Yamato Gold test that level. If we just look at retracement areas on the weekly chart from January 2016 all the way to the high in 2016 back in July, you're below the 0.618 level. That's never good. That says you could go down into the 237 area. No bullish reversal signals at all. So that's what the weekly chart is showing us. If we come over, so we'll look at both negatives and positives out here. Really exploring both sides of the trade, right? That's what you and I need to do every time we take a look at any instrument, is explore both sides of the trade out here. So now we'll put up the daily chart, this set of tools, take a look at Yamato Gold. If there's a positive here, it's that we saw a nice little TD sequential count form on December 2nd, number 13. Oftentimes that can be the sign of a change in trend that is coming. What else is positive? Well, Yamato Gold happens to be trading above that oscillator and change line. That's the very bottom panel that we're looking at out here. Now, it is rising. It's still below zero, but at least it's rising below zero, which says that a counter trend rally could unfold. What you would not want to see is for price to close below 286 or whatever that level is going to be on the red line as price gets into that area out here. So has it formed a bottom? It is trying to form a bottom. There's no question about it. We have not seen any type of bullish reversal signal out here. It's just not enthusiastic. I'll just simply go back and say the answer to that question, depending on the type of trader that you are out here, there is on that chart that we just looked at, there are signs that could say, okay, I could see a reason to go ahead and take to attempt a long position out here. But I'm telling you, as long as gold, as long as the Japanese yen, John, is going to trade below that oscillator unchanged line, that's a black line we're looking at on my screen right now, top panel out here, it has major headwinds, let alone the major headwinds right now of the U.S. dollar index. So yesterday I had mentioned that the U.S. dollar index was in counter trend rally mode. Let's go see if, in fact, that outlook needs to change out here. And we're going to do that by putting up, as soon as I can find it, the December contract for the U.S. dollar index. I'm going to try to do that. Come on, work with us. We're on live. We're on a live little show out here. And the answer is yes, we now have to change that outlook. You might say why, and I will say because the U.S. dollar index is now trading above its oscillator and change line, 101.52. I don't know where it's going to end the day. If it closes back below 101.52, then the call yesterday that this is just a counter trend rally. This leads into Jay's question asking, have we ever seen where that oscillator and change line acts as support or resistance? In this case here, it would act as resistance. So price oscillator down below, it is positive, by the way. It is well above zero out here, and nothing more bullish than a rising price oscillator. So watch 101.52 in the U.S. dollar index at the end of the day. I don't see reasons, John, in Sarasota, for you to rush in versus Russian, but rush in to go ahead and take a trade on AUI, on really any of the gold miners. Now, look, I am long a couple of mining positions out here, and they've been behaving okay. It's not blowing my skirt up, even if I wore a skirt. It's not blowing it up, knowing that the Japanese yen is not giving you or I any type of a confirming signal out there. So, and I tell you what, personally, I've got, if I share something with you, you know it to be true, and you could go do it yourself. But I've already done the studies on taking a look at divergent patterns when mining index is heading higher and gold is heading lower to see who wins the battle. And I got to tell you, folks, it's a draw at best. It doesn't mean diddly. we can just trade one thing versus the other. The miners are telling us one message. Gold, the yen, is telling us a different message out here. And so I say just stay focused on what those miners are communicating to you and I. And so you can bottom feed, you can nibble, you just don't have any kind of a confirming message when it comes to AUI. And that's not for every single one across the board, but specifically our AUI out there. So I hope that helps you out. I don't see any other questions in the Tiger's Den, and I don't mean to belabor anything, but I do like to be thorough out here because, look, it wasn't that long ago, although it wasn't that many years ago, although that it wasn't. I was, for those of you that are new to technical analysis or listening to us, where I wanted to sit on the other side, where I was sitting on the other side, and somebody call in and give Tom a symbol, and he'd call it up, and I'd want to, okay, what is all the different things that he's looking at? And so I'm just trying to be thorough and go through that. Looks like Brent in Martinez, California, sent in a email. Looking at two stocks out here, NE, Noble Energy, I believe it is. Boy, if you're still on that, nice job there. I believe that he is in about 5.25. What a nice day Noble Energy is having today. This thing here is up at the 1 to 1.618, A to B equals CD. Looks like James Bond is where this is headed to, Brent, 777. The actual high today is 773. We'll continue to look at Noble Corp when we get back from this break.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Just to finish off Noble Energy, as we pulled this stock back to the further left, we could see this nice little high volume, high-ish area out here, the trading session of March 4th and March 7th. Longer term, that is where Noble Energy is headed to, which is up in the price point as high as $13.90 out here. You're trading at $7.60 right now. So, Brent, a nice trade. I don't see any reason whatsoever for you to do anything other than stay with this trade. It looks to me like you have got a nice bottom. I would definitely stick with it. Let's go to Mike in Ormond Beach. Mike, thanks for calling. Thanks for holding. How are you doing this afternoon?
Great, Steve. I'm glad to hear you sound a little bit better.
Boy, it feels good to be a little bit better too. So I'm looking forward to a weekend of rest. We don't have much time. Let's try to get right into it here. You're taking a look at the QID, which is the Pro Shares. Okay. And this would be my suggestion. I would, I wish the call was more about the NQ, because then the trade setup would be much simpler for you. And here's what I mean by that. And when we take a look at all of the equity futures contracts right now, the ES Mini, if we take a look at normal expansions of swing points, says it should head to 2271. I don't have a clue where the Dow is headed to. I do, but that thing is in a little rocket ship. The Russell, it's by all types of levels of resistance, but it is the NASDAQ that ran right smack dab into resistance this afternoon. Its targeted high of resistance was 48.97 and a quarter. The actual high was 48.97. So you got to love that. It basically ran right into resistance. That, combined with earlier on the show when we took a look at a potential seventh wave pattern inside of it, it's very easy trade. Your stop is just on the other side out there. If you get into the trade inside the QID and you hold on to it over the weekend, it's just not a good scene out there, because these short-term patterns that typically form tops out here have been steamrolled. And so, you still take the trade with as limited a risk as you can. And inside QID, you just don't have that out there. I'd rather you wait, till Monday to get some type of confirming message from a shorter term trade out here. But you just don't have it. So could I see somebody taking something short, risking just a very little, and some type of stop above 48.97 and a quarter? Yeah, absolutely. That would make all the sense in the world to me, because the patterns are in. But to take something longer, like inside of the QID, I think the risk is too great at this stage of the game.
Right. Well, that's what I said. I kind of got my eye on it, and I wanted your opinion, because I'm kind of watching it, and I don't want to get in too quick, and so.
Yeah, no, I get it. And even if it were a good trade, your reward on this, the first target is going to be about 24, 30 something, and change. You're at 23.77. Let me see if I just put up what Taz profiles might have out here. They're also down at about 24.33. So it's just not a really great reward to risk. The futures contract, a little bit different, because it's as one of our guys in the den likes to say, you're either right or you're right out of the trade out there. So that's my take on it, and I hope that helps you.
Yeah, it does, and thanks for everything you do for us, Steve.
My pleasure. Thanks so much for calling and the good wishes. Folks, stay tuned. David White, our favorite polar bear, he's going to be up next on the Tom O'Brien Show to take us home for the weekend. And I'll see you Monday back at about the 150, 200% level. Let's hope. Have a great weekend, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.